The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box Europe this Monday morning with who have we got? Juliana Tattlebaum, Karen Cho and myself, Steve Sedgwick, and these are your headlines. So big news in Japan, the Nikkei trading at an all-time high. Look at that, nearly 5% higher, crossing the 48,000 mark for the first time ever, after the country's ruling party picks hardline conservative Sanae Takaichi as its new leader, set to become Japan's first female prime minister.
The US government shutdown enters its sixth day with President Trump threatening mass layoffs of federal workers, while top Republicans and Democrats play the blame game.
The reason the government is closed is because Chuck Schumer and 43 of his Democrat colleagues in the Senate have decided now to vote multiple times to keep the government closed. We need them to turn the lights back on.
Well, unfortunately, Republicans are lying because they're losing in the court of public opinion as it relates to what's going on right now. We are standing up for the health care of hardworking American taxpayers.
And French Prime Minister Sebastien Lecornu picks his new cabinet with Macron ally Roland Lescure to become finance minister.
Do you know what happened? Good morning, ladies. How are you?
Morning.
Doing
Good,
well.
good. Do you know what happened 46 years ago? Lots of things.
Many things, of course.
1979, by the way, in case you were doing the math. 4th of May 1979, Margaret Thatcher became the first female prime minister in British history. And of course, she since has basically created, there have been many people who have tried to mimic her, male and female, who have kind of taken on the role of the Iron Leader, a very strong monetary or fiscal position as well, getting a very strong nationalist position as well. And now Japan has someone who also admires Margaret Thatcher very strongly.
Yes, Japan's had to wait a while for their first female prime minister, though. I think momentous for the country, but also someone who is a fan of Abenomics. So in terms of what type of economic policy we could see out of Japan, I think that's what the market is wondering today. But it is the detachment too from fiscal discipline that is concerning for some of the markets. And again, we've got another story where you've got a very large weighting for investors in the bond market, where you've got yields at the long end escalating amid some of that concern about what it could mean on more spending practices, but also in terms of interest rates, whether there's some pushback against lower interest rates from here, because that's what has been spelt out by this particular leader.
I think it's always fun to also come in on a Monday morning to a surprise. This wasn't the expected result of the Japanese election over the weekend, and that's part of why we're seeing this mammoth reaction in markets.
Yeah, can Japan afford it? And there's a question that we will continue to ask as well, because Japan's ruling Liberal Democrat Party has picked hardliner, as we mentioned, Sanae Takaichi, as its new leader, putting her on track to become the country's first ever female prime minister. She's a former economic security and internal affairs minister with a track record for expansionary fiscal policy. That doesn't sound very Thatcherite, does it? Anyway, let's have a look at the equity markets in Japan. 5% higher, crossing 48,000. The topics, the wider measure there, 3.3% higher. We have the dollar gaining heartily on the back of concern about that fiscal expansion, 1.9% higher versus the Japanese yen, and the 10-year yield trading at 1.675. In her first news conference since being elected LDP leader, Takaichi outlined her nationalist principles, stressing that she will put Japan's interests first.
I'm hoping to change the scenery for LDP a little. If we face something against the national interest operationally, I think we should firmly convey our message within the framework. I am not thinking of flipping what Japan and the US agreed on at this point. In order to protect Japan's peace, I will put effort into diplomacy no matter what.
So, Cowrie joins us now with more on this. So, Cowrie, I can't work out whether she's a Thatcherite or not. Being an admirer of Margaret Thatcher doesn't make you a Thatcherite if you don't have those kind of policies. But anyway, tell us all about the new Prime Minister of Japan.
Exactly. I mean, she is saying that Thatcher has been a role model, but in terms of policy, I mean, that's pretty much where the similarities end. I mean, we have known for quite some time that Sanae Takaichi is a nationalist. She's a conservative. She's from the right wing of the LDP. And this is very clear in the shift that the LDP has made and veering towards the right, especially because some of the other opposition fringe right parties did so well in the recent election. So this is really a pivotal moment for the LDP, not just because this is their first leader since they were created 70 years ago, and she will be rubber stamped almost certainly, probably around October 15th, to become Japan's next prime minister. Everyone is calling this the Takaichi trade. We did get a chance of this, a whiff of this, a year ago this time, because this is the third time that she's running. She ran as the head of the LDP, and what we saw back then is very similar to what we're seeing today. We saw a huge rally in the equity markets, 48,000. Beyond that is the first time here in Japan we saw a weakening in the yen from the onset of early Asian trading. We're about 3 yen higher on dollar yen. As a result of this win. We're also seeing some concerns in the bond market as well. The 10-year JGB yield hitting another record high, highest level in 17 years, I should say. And that's playing out in the super long bond market as well. And this is all because of her pro-stimulus measures. She's an advocate of spend, spend, spend until the economy grows in the mold of her mentor Shinzo Abe and the Abenomics agenda. She toned down the rhetoric quite a bit in the run-up to the election, as you would expect. But after her victory, in the victory speech, it became fairly clear that she was for spending towards Japanese growth. And she said things like, look, I want to cut the gasoline tax. I want to give more money to small enterprises that are not doing so well. And I think the million-dollar question is, does this slow down the Bank of Japan's tightening cycle? And I think the markets, at least today, are expecting the answer to be yes. And I think we did get a taste of the real Sanae Takaichi after that victory, because she said, look, it may be inflation if you adhere to IMF standards, but Japan is on the cusp. This sounds to me like a new prime minister telling the BOJ not to tighten.
Cowrie, terrific setup there. Let me just explore a little bit further the Takaichi trade with you, because the bond markets are showing some concern at this stage. And in the context where we had the BOJ the other week signaling that it was going to start selling some of that massive ETF portfolio that it had, what are the options now for the BOJ as it weighs up the Takaichi trade?
Yeah, I mean, before Saturday, I think markets were expecting that maybe there's an increasing chance that the Bank of Japan might tighten even as early as later on this month with the next policy board meeting starting on October 30th. But remember, there is no meeting for the Bank of Japan in November. So the next chance they'll get is in December. So I think people are expecting that they will be on hold. I mean, on paper, I think the government is going to try and play it so that, look, if she's going to be prime minister on the 15th, it only gives her 2 weeks to sort of get accustomed to the Bank of Japan, for two entities to be on the same page. But, there is growing concern that the Bank of Japan is already behind the curve because, inflation has been moving well above the 2% target for quite some time. And don't forget the dollar yen impact as well, because a weaker yen, not good in that front as well. And I think we need to raise the political issues as well, because the U.S. administration has made it clear that they do not want Japan to use a weakening yen as a way to bring more money for their exporters, because, over the last couple of months, they've been trying to hammer out these agreements to try and lower the trade deficit with Japan.
Cowrie, thank you so much for the breakdown. So much to think about. Really appreciate you joining us first thing this morning. Let's turn to markets. Cowrie ran us through some of the big moves we've seen. Japanese stocks surging to record highs. The yen weakening sharply against the greenback in response to this election result. Take a look at the Asian trade. You got Nikkei 225 sharply higher, almost 5% right now. Outside of Japan, a bit of weakness in Hong Kong. Hang Seng pulling back by about 0.6%. Mainland China markets closed today, as well as the South Korean stock market. In terms of U.S. markets, last week turned out to be a decent week for for U.S. equities. We had all three of the majors gaining over the course of the week, led by the Nasdaq, which added about 1.3% over the 5 days. In terms of Friday's trade, it was mixed, fairly muted, but overall the market gaining over the week. Not gaining as much as we saw in Europe, however. Let's turn to European futures now. Last week, the Stoxx 600 outperformed its U.S. counterparts, advancing 2.9% over the course of the week. Right now, we are looking at a fairly mixed and muted start to trade. But again, this comes after quite a strong performance last week.
Meantime, stateside, the White House has threatened to start layoffs of federal employees if there is no resolution to the U.S. government shutdown. Kevin Hassett, the White House's Economic Council director, told CNN the Trump administration is lining up mass firings but hopes it doesn't come to that. Democrats and Republicans are at odds over funding for health care. The Senate is due to vote on a stopgap funding bill today, but it's not expected to pass. Speaking on NBC News' Meet the Press on Sunday, Speaker of the House Mike Johnson accused the Democrats of not taking shutdown negotiations seriously.
The reason the government is closed is because Chuck Schumer and 43 of his Democrat colleagues in the Senate have decided now to vote multiple times to keep the government closed. We need them to turn the lights back on so that everyone can do their work. The House did our work. We passed a bipartisan, clean, continuing resolution to keep the government open. And what did Chuck Schumer send back in response? His counterproposal would add $1.5 trillion in new spending for a simple 7-week stopgap funding measure to keep the government open so all these appropriations bills can be finished. And they want to claw back $50 billion that we put in for rural hospitals to prop them up. They're not serious. This is not a serious negotiation.
Meanwhile, Democratic House Minority Leader Hakeem Jeffries pinned the blame on the Republicans, accusing them of being dishonest about the state of talks.
Well, unfortunately, Republicans are lying because they're losing in the court of public opinion as it relates to what's going on right now. We are standing up for the health care of hardworking American taxpayers, of working class Americans, of middle class Americans, and everyday Americans who have seen over the last several months Republicans pass their one big ugly bill, largest cut to Medicaid in American history. Hospitals and nursing homes and community-based health clinics are closing all throughout the country, including in rural America. If Republicans continue to refuse to extend the Affordable Care Act tax credits, tens of millions of American taxpayers are going to experience dramatically increased premiums, copays, and deductibles. And that information from their insurance companies is going out right now. Now, federal law clearly prohibits the expenditure of taxpayer dollars to provide health care to undocumented immigrants, period, full stop. And no Democrat on Capitol Hill is trying to change that law.
Two very lines of thought in the most recent Fed speak, very different lines. Governor Stephen Myron once again calling on the Federal Reserve to accelerate rate cuts, telling Bloomberg that, quote, if the policy is out of whack, you should adjust briskly. But on the other side, you got the Chicago Fed President Austin Goolsbee telling CNBC on Friday that he's wary of what impact front-loading rate cuts would have on inflation, which is already ticking higher. Well, we are very pleased to have Joe Brusuelos with us, a chief economist at RSM US. Joe, very good morning to you.
Good morning.
Well, we were all bracing to kick off the conversation with you around the U.S. shutdown, the implications for the U.S. economy, for the market. But I think we've got some more pressing news for financial markets, judging by the action in Asia overnight, and that's the Takaichi trade. Any thoughts you want to share with us on what it means for the market?
Well, I think it's very clear that global traders are setting up to be long equities today. But I think the bigger news is what's going to go on across the yield curves in the G7. You know, as Japan moves forward, and they're going to get a very brisk expansionary tailwind behind Prime Minister Takaichi, I'm thinking you're going to see yields begin to rise. I would expect as we roll into the London session and then later today as New York gets going, you'll see the 10 and 30 years start to move higher.
That creates quite a tricky situation for policymakers stateside.
Yeah, this will not be popular in Washington. They do not want a weaker yen driving equities higher and yields longer. So you should expect to see some early tensions between Tokyo and Washington.
To that point, this is an administration that is not afraid of having a fight. Currency manipulation, this has been a massive issue in the past. Could that be something that the U.S. decides to try and tackle?
It's very clear if you look at Trump 1 as we bleed into the ninth month of Trump 2, that they will use the idea of currency manipulation as a way to pressure their trade partners. So I would expect in the end of the year to see that discourse actually become a bit more prominent.
I mean, it took quite a while for the Japanese to arrive at a trade deal first up, and we were all told that they were pretty much at the front of the queue. That's not where it ended up. It was quite tough negotiations. And could things actually go back down to some sort of bunny hole of trade negotiations?
Those negotiations were never completed. The Japanese completely say they did not agree to what the Trump administration says they did. So this is going to come back hard and fast very quickly, especially now that the government shutdown in Washington has entered its second week. Trump is going to be looking for any reason he can to distract from that.
Sorry, we talk about the Trump administration disdain and concern about fiscal policies coming out of Japan. Sorry, are we in a dystopian, ludicrous, inverse reality world where the American fiscal position is so strong and that hasn't been a deliberate weakening of the dollar because of its fiscal position?
Well, the American fiscal
Sorry,
position...
have I missed something?
No, the American fiscal position is not strong. Clearly.
It's worse than Japan.
I'm not going to say it's worse than Japan. Japan's a very unique economy across the global scene. I think the reason why the dollar's not weakening is because of that structural strength where, look, 89% of all transactions include the dollar.
Sure.
Every day when the banks close, you got a $12 trillion repo market where you need to have Treasury to put up as collateral. I don't think I'd be looking at it in those terms.
So I wasn't looking at the world's reserve currency. I was looking at the U.S. budget deficit.
Oh, the budget deficit's going to deteriorate. And clearly, it's not. But it's not just.
By the way, this is apolitical because the Democrats have done just as bad.
No. And we got problems in fiscal space across the G7 this morning. It's the U.S. You got Japan. You got France, where the government could fall. You got the slow motion train wreck here in the UK. So there's a lot of different things going on all at once.
Yeah, I don't understand this line from the conversation this morning about it being a manipulation of the Japanese currency because of expansionary fiscal policy.
Well, if you're an aficionado of the Trump administration, things don't always align with logic, my friend.
What about the fact that this lady's a nationalist as well? Surely that's going to sit well with the Trump administration because there's going to be more defense spending.
That will. That's something that clearly, with the things going on in Northeast Asia vis-a-vis China, that will sit very well. But that's the nexus of the possible compromise, right? Yeah. When you look at the Trump's negotiations, it all comes back to defense spending and arms sales.
So Joe, just to final point, just given what you just said, and you chucked the dear old Brits in there as well, and don't get me wrong, clearly you're right, even though you're over here and you're telling us about our bond market.
Well, I'm going to see my clients later today. It's going to go over very well.
I jest, of course, we're in a terrible position. But there's no reason not to own equities then, given what you just said.
No.
Yeah.
No reason at all.
Well, that's the point I was going to raise. So it feels as though something has to break. You can't have the yield moving aggressively higher, and you can't have the equity market going from record to record at the same time. Surely one of them breaks at some point.
Well, at one point, something's going to have to give, right? My sense is that we have a little bit of irrational exuberance going on in the American equity market, specifically around tech. We've got a very sophisticated model that says anytime we get one standard deviation above our index, you're going to have what I would call a healthy correction where you kick out the speculators. It seems to me that's where that's going, right? But make no mistake, yields on American debt are going to move higher because we've got the latest edition of the American fiscal follies going on.
So just to follow up on that, I wanted to show you the Japanese 225 over a 5-year basis, because what you point out suggests that anyone who buys today because they think that there's going to be more upside is effectively chasing one of the greatest momentum trades that has unfolded in the Japanese market in recent years. I mean, it's incredible. If you chart the 5-year, it has just absolutely taken off since mid this year. So are you saying investors should be chasing that
I'm not saying
trend?
there should, but that's what's happening. Yeah, that's what's happening right now. You can't deny the reality of the situation, which is there's a great fear of missing out amongst global equity investors. I mean, my thing is more economics, fixed income, and currencies. And what I think is that that's the trade, the Takaichi trade.
Joe, you've thrown out so many little nuggets and paths we could go down, so I'm going to just choose one, but we could go down many. And that's that President Trump is looking for anything that he can right now to distract from the government shutdown. And no doubt that the Takaichi trade and what's going on in Japan offers that opportunity. But it feels like markets don't really care that much about the government shutdown. We've got U.S. markets rallying last week, really looking through it because ultimately markets don't like uncertainty and they kind of assume it's going to get resolved one way or the other. So why should we care about the government shutdown in your view?
All right, so the first week of government shutdown is always about noise, but the second week it gets serious, and the next week, the week of the 12th, that's when my estimate of a 0.1 percentage point decline per week of GDP, well, it goes linear. It will more than double. The longer this goes down, that's when markets begin to focus on this. But that won't be until next week. But make no mistake, it will get a lot more serious this week. This is when they want to strike a deal. Because why does it get serious next week? The 15th is the first missed paycheck around the country.
And when you say that markets will start to care then, specifically, what's the transmission mechanism? Is this about what it means for corporates? Is this about what it means for the Fed to not have access to the public data that they're used to and that they need?
It's three things. One is that drag on overall consumption begins to hit. Second, it's the corporates who do business. And then third, if we don't get this solved by the 15th, we're gonna miss more government data. Specifically, the Fed won't have sufficient data on inflation, and we'll miss another jobs report. I mean, literally, if they don't get this solved by the 15th, we won't even be able to estimate the U.S. unemployment rate until December.
Wow. Joe, in terms of this healthy correction that you chipped that one in earlier on, what does that look like? Because when you talk about, I think you were extreme about it. You said about a misvaluation in the tech sector as well, or a slight overvaluation in the tech sector. I think it was your exact words as well. I'm confused because a healthy correction, I'm a great fan of corrections, by the way, versus the kind of correction we've seen in previous tech bubbles as well. Why won't we get the latter, and why is the former just enough for this market, given that enormous amount of
the record
concern?
of our index is any time we get one standard deviation above neutral over the past 4 business cycles, you tend to get a correction that's usually in that 5 to 10% range. What you're talking about clearly is going back to the dot-com bubble, and that was more of a historic breakdown of a very specific market, the NASDAQ. Here we've got an over-concentration of risk in a small area of the S&P 500.
So that's the biggest understatement in history, Joe. In a small area of the S&P 500.
Well, it's funny, after 30 years of doing this,
Joe, if you did that on purpose,
really
that is...
subtly tell everybody, hey, look, maybe you need to...
Do you want to tell everyone about the small area? We're not talking about some rural agricultural machinery stocks here. We're talking about the biggest tech companies on the planet.
A small number of tech companies
who just happen to dominate
are chasing
all the
returns
investment
on artificial intelligence. There's $360 billion on the table this year, and we're not even sure that we have the proper energy infrastructure to support this build out. So there's a lot of risk on the table, but that's just part and parcel of what we do.
So the counterbalance is the defense trade, and that is gold, just shy of 4,000. We've seen a real escalation in that. Some of the brokers called more than 4,000 this year, so we're getting very close to those levels. But Bitcoin also trading higher, 125,000 for the first time yesterday. What do you make of the safeties that have been put into the system? Are they actual safe harbors these days?
Well, when it comes to Bitcoin, I think it's an excessively risky and speculative bet. Investors who are in there ought to be prepared to lose their risk capital. When it comes to defense, though, that to me seems a little bit more of a more sane trade, we can call it, simply because the demand is there. I don't care whether you're in the US, Japan, or Germany, you're going to see outlays on defense increase, and that's just part and parcel of the reindustrialization of the West.
Joe, thank you so much for joining us. It's great to see you in person.
Yeah. It was great.
We could go on and on, but we've got to move on.
That's another time.
You'll have to come visit us next time you're in town. Joe Bruce-Wallace, Chief Economist, RSM US. Now, coming up on the program, France's new prime minister names his cabinet ahead of high-stakes budget talks, and OPEC Plus members agree to more output hikes, but far less than had been mooted in some quarters. And we'll dig into the private market outlook with Sunaina Sinha-Haldeya, Global Head of Private Capital Advisory at Raymond James. Don't miss that conversation at 8:30 London time.
And let's turn to France, where the new Prime Minister, Sebastien Lecornu, has named a new cabinet. Former Finance Minister Bruno Le Maire has been appointed as Defence Minister, while the former Industry Minister, Roland Lescure, is set to become the new Finance Minister. A quick flash this morning, just crossing the wires from the French Socialist Party leader Faure, saying, I have a feeling of consternation having seen appointment of new government. So let's get to Charlotte for more analysis. Charlotte, the stock market had just started to pick up last week. French stocks, 6 positive sessions in a row. So some of that political risk where investors are being very cautious over 2025, which is put aside as the stock market started to gap up with the rest of Europe. But what is the scene, the political scene there like, and what are still some of the sticking points?
Yeah, well, today looks like a day of high risk, certainly for the French government, probably faster than expected after the Prime Minister, Sebastien Lecornu, named his government late last night. And look, that's about a month after he was picked as Prime Minister. And as you're saying, it's the reception on that new government is not seen very positive from all the different parties, because here again, it is a minority government, so they need to have the support of some other parties to not be toppled, like the predecessors, like the Bayrou government there. But of course, out of the 18 names that we mentioned yesterday, 12 are similar ones. So interior, justice, foreign affairs, they're all staying in place. That's despite on Friday, Sebastien Lecornu announcing that he would not use the all-important mechanism of the 49.3. We've talked about it many times before. That means allowing the government to push through a budget without a vote. He said he was giving up on that. So that was a big concession to the socialists in particular, and a big gamble as well, because that means the government it won't use that power. He needs to find a majority in parliament to push for a budget. So again, you mentioned the key 2 nominations. There were Roland Lescure, economy and finance minister. Again, he has been in government before. He's a close ally to Macron, and the return of Bruno Le Maire. So that is the one that is the most controversial there. He will be army minister. Of course, he was economy and finance minister for Macron for 7 years. And for some, he is the man responsible for the budgetary situation in France at the moment. And that was in a sense the key message from Marine Le Pen, the leader of the far right, saying it's an identical government seasoned with the man who bankrupted the country. We are speechless. And one thing is that from the far right, maybe it is not surprising, but the center right, Les Républicains, that are also part of the government and instrumental support for the government, are also not happy about this. And that's what we heard from Bruno Retailleau yesterday. He said that the composition of the government does not reflect the promised break by the Prime Minister. And that is crucial here, because the center-right have been an allies of this government for a very long time, and even they are not happy with this new government. So while normally Lecornu will have to please both the center-right and the center-left, none of them are happy about this government. So the first cabinet meeting is supposed to happen today, but before that, Les Républicains are meeting together to decide whether they want to continue this government or just go away altogether. So this cabinet could be dead before it even started.
Is the pressure going to come from the bond market? This is what we talk about a lot in the United States as well. Do the politicians, and I'm very interested in your view, and I think our viewers would love to know as well, do politicians in France respond to the bond market as much as they do as politicians in the United States, even administration, and politicians in the United Kingdom? Even Liz Truss and the market, basically destroyed her government because they didn't trust her fiscal plans as well. Is it the same kind of relationship with French politicians, or are they oblivious?
They will have to eventually. I mean, it feels like they just cannot ignore it, and they haven't had a moment like the ones you mentioned before. So maybe if that moment comes, they would have to. One moment that would be crucial for that is there is a speech tomorrow by the Prime Minister to the National Assembly presenting the roadmap of his government and potential key measures for the budget and key cuts. And we know he's faced already several protests and several warnings that not to make too many cuts like his predecessor. So there will be some key proposal we put on the table. He said he will not put forward the Zuckman tax. So we have to wait and see. So if some proposals can bring on board some of the socialists tomorrow, then that will be important in his speech. But that could be a really important make or break moment for the government and potentially for the market, depending on what the future of that government looks like.